How's it going, guys? This is Israel, your loan officer down here in Southern California. And well, today is January 8th, 2021. And well, the mortgage market continues to go up. Those interest rates don't seem to be showing any signs of slowing down. And so we got a lot to cover. Let's get right into it. Okay, and here we go. The headline of the day is, have we seen the end of record low rates? Well, from the article, it says runoff elections in Georgia was by far and away this week's most important event. This wasn't a surprise either. In fact, interest rates have been bracing for this potential impact since the inconclusive results in early November. But why do rates care about politics? Well, to answer that, let's take a look at this graph. All right, we have the Federal Reserve, Georgia, and the 10-year Treasury yields. As you know, starting early 2020, we got hit with the COVID pandemic, and that's when the Federal Reserve jumped in to help the situation. Starting April, September, October, as you can see, there was an incremental or a gradual bounce back of these 10-year Treasury yields. And come Georgia elections, that's where we saw this major bounce back. Hence, that's when you start to see that these mortgage rates start to climb. Now, in 2 weeks from now, we're going to have 51 Democratic votes. This is taking into account Harris as a tie-breaking vote. So there are just a few Democrats that are still not wanting to approve the $2,000 relief payment. But from the looks of it, it's going to happen. And so ultimately, more stimulus basically equals more Treasury issuance of these bonds. And ultimately, it's going to bring an upward pressure to the mortgage rates. And that's exactly what we saw on the mortgage-backed securities. With that, let me share with you this graphic that I have set up for you. Again, we follow this day by day, as you know, and there's a reason why, because this basically tells us where we are heading. Well, just imagine that you're thinking about refinancing or purchasing a home. The objective of this channel has always been to keep you guys informed. And so visually, what I do every single day is follow these graphs, especially this one, the mortgage-backed securities. If you remember, day before yesterday, we were at 38, negative 38, which was represented by this candle. Then yesterday, we were at negative 19, and today we closed at negative 24. As you can see here on the little footnote, positive news equals higher interest rates. And that's exactly what happened today. Check this out. Conventional loan, 30-year fix, 20% down payment on a purchase of a home. And as you can see, our rates continue to stay the same. There wasn't a lot of movement, at least with the FICO scores in the range of 740, 700, and 660. The people with a FICO score of 640 did see an improvement of 3.625 versus 3.875. But take a look at the competition. We have 2.875, 2.75, and 2.625. And now moving on to the second program, this would be an FHA loan. Now here, only difference is that it only requires a 3.5 down payment. People with the 740 and 700 FICO score ranges didn't really see a change at all. But now take a look at the competition. If anything, Quicken Loans is offering a 2.5, Citibank and US Bank 2.75. All right, to finalize this video, if you are a homeowner thinking about refinancing or maybe putting your house on the market, give us a call. We have a great team that will be able to help you out on that. If you are a first-time home buyer thinking about making that move, as you can see, we try to keep the lowest and most competitive interest rates out there, and definitely reach out to us at 661-388-7667, and we'll be more than happy to help you guys out. Lastly, may God bless this nation. May God bless you, and I'll see you guys on the next video. Take care. Bye-bye.